So now we come to the numbers, and we're going to take a look at the financial statements for both Evestar and its main rival in Teeland, Bonchant. We're switching from the pre-scene for this section to a document that the CIMA Hub has put together. What this document does is shed some more light in the numbers by showing the percentage changes from year to year, as well as some ratio analysis that we've performed. Of course, all of the financial statements numbers are the exact same as in the pre-scene. So we move to the statement of profit or loss, and it's quite interesting to note that we have 5 years of results noted here, and that's unusual because for the pre-scene materials usually CIMA releases 2 years. I don't think I've seen a pre-scene with more than 2 years compared. So we really get to see the evolution of the performance for Evestar over the midterm. Starting with the revenue figure, and what we see is that between 2012 and 2015, really Evestar enjoyed very robust revenue growth from between 11 and 14%. It's still healthy in between 2015 and 2016 at 8%, but declining. And we see that decline has been year on year. The percentage change has been declining from 14% to 12% to 11% to 8%. So consistent growth, solid growth, but declining. The cost of sales then, it's worrying that between 2015 and 16, we really have a very large increase in the cost of sales. So there's an increased cost of production associated with making Evestar's shows. And as a result, of course, the gross profit figure has registered minimal growth of just 1% following years of consistently solid growth. So cost of sales, the increase is outstripping the increase in revenues, and that is affecting the gross profit growth. Administrative expenses as well are really increasing over the last 2 years, 32% increase between 2015 and 2016, a 29% increase during the previous period. So really high growth there for the administrative expenses. You think about the fact that this real upturn in administrative expense growth has coincided perhaps with the launch of the show The Cavern, which has been 2 or 3 years on the market. 190% growth in administrative expenses between 2012 and 2016. There's a problem there for Evestar. Advertising and promotion, very interesting to note here that 0% growth over the 5 years. And I wonder, has it got something to do with Denny's influence with newspaper editors, which we were told about earlier on? In other words, Evestar is getting free promotion and its shows are getting plenty of publicity and free press. The newspapers like to write about the reality TV stars and the latest singing stars coming from Teeland Variety, etc. The operating profit then is down 3% for the year. Administrative expenses have really had a huge impact there, so that's worrying. Then we come to the finance charges. We'll see that this is a company that is highly indebted. They're paying out a coupon rate on its bond, on its corporate bond, flat rate every year, 20 million being paid out. Tax, there isn't much to say about it, and what we see with the profit for the year, the net profit is down 6%, so that's worrying because they have been registering consistently solid increases in net profits over the previous 4 years or so. So what we see here is that costs are spiraling and they're affecting profitability. Primarily cost of sales with an increased cost of production for these shows. These are high quality shows, as we were told before. This is the high end of the reality TV segment. And administrative expenses as well are really spiraling out of control. So Evestar needs to get a handle on its costs. They need to lower their costs. Maybe it raises the question of whether they could move into the production of lower cost shows at the lower end of the reality TV spectrum, as its rival Bonchant seems to be doing, and as many other rivals seem to be doing too. Turning our attention then to the statement of financial position, looking at the non-current assets. So a couple of things jump out here. The property figure we'll see is down 9% over the 5 years. Likewise, intangibles is down 13% over the 5 years. So what this suggests is that Evestar is just not investing a lot in its non-current assets. Property is not being replaced, it's decreasing 2% per year solidly. We might assume that that is the depreciation rate. The intangibles then, we're told they're related to program development. We asked the question as to whether Evestar is investing sufficiently in new content to generate future revenues. And this indicates to me that, well, it's not. And we're seeing the effect on the revenues, that they still have revenue growth, but every year since 2012, that revenue growth has been slowing. And it will continue to slow if they fail to invest in new program ideas. This is where the intellectual property resides, and it seems that Evestar is losing out and is playing a little bit of a dangerous game there by not investing for its future. Current assets then, we see trade receivables have been increasing from year to year. They're up 8% over the last year. It indicates and signals that the buyers are quite powerful. Of course, these are the broadcasters, the television broadcasters. They're significant buyers. They have significant power. Cash and cash equivalents. This is worth dwelling on for a moment because we have a worrying scenario really here. Down 300% over the 5 years. Year upon year, the cash is being whittled down from 56 million in 2012 to just 14 million in 2016. This signals that there is poor cash management at this company. Where is all of this cash going? I have reason to believe that all of this cash has been used on the cost of producing programs. Is about $1 million $T per episode of Teal and Variety, and it seems that the funding for those shows, it's not coming from fresh debt, it's not coming from fresh equity, it seems to be coming right out of cash. So that's worrying for Evestar. The cash is really suffering. Overall then, total assets are up just 3% over 5 years. This indicates to me this is a company that is not really reinvesting in its asset base. Having said that, we'll see in the ratio analysis shortly that its assets do work and have been working very hard over the 5 years because they've got the same asset base, the same capital employed, but increasing revenues and increasing profits. So they're making their assets work harder every year. But I wonder how long they can continue to do so, especially if they're not investing in new programs and new program ideas. Where have the profits been going over the years? Clearly they're not being reinvested in the business. The next section of the statement of financial position will reveal more. We come to then the equity and liability section of the statement of financial position. Shares. We see there have been no new shares issued over the last 5 years. And that's something that the investment community is picking up on, as we will see in a few pages' time. Investors are worried that no new equity has been issued by Evestar. Retained earnings, pretty flat over the 5 years, just a 3% increase. So they've been making profits year upon year. Those profits are not being held in retained earnings.